Hello guys, Naresh here. So in this video, I'll be giving you valuable tips to how to avoid fake outs, like most of the fake outs, and how the most common mistake is how to not get FOMO and enter in the trade without proper confirmation, like not waiting for the right setup. Simple as that. So how to solve this? And we can understand that most of the beginner trader would have encountered this. You encounter this struggle. So like how to avoid this, and I will give you simple steps, guys. So first of all, my tip would be like finding a time frame, guys. So stick to 1 or 2 time frame. Like if you are doing the analysis in 4 hour, try and take the 1 hour time frame for the entry. Don't change in that, guys. Fix on that. So if you are able to fix on one time frame, it is more than enough to make money, guys. So if you're still switching the time frame like 30 minutes, one day you're looking the 30 minutes analysis and entering 15 minutes, and one day you're entering in 1 minute using the 5 minutes analysis. So basically you're confusing yourself, and each time frame will be like moving differently, totally differently, guys. So the first and foremost advice for the beginners is to get the proper time frame which suits you. Just do your backtesting, guys. Backtesting is so important. I can't emphasize more enough. Like it is very important, guys. Just try with, first of all, try with 4 hour time frame. Just try on that. Just do the analysis on 4 hour and entries with 1 hour, and do the back testing how it works, whether you are able to succeed on that, like whether you are able to find your system and you find your edge using that time frame. If you are able to find an edge and have a good entry setups, and if you are having a good system, stick to that, guys. Stick, simple as that. Stick to that. And how to avoid how to wait for the proper setup, guys. So you have got the edge, and you have the proper system. So let's say you have a simple price action strategy. Let's say this one. So it is making higher high here, and your simple strategy is to enter the pullback, which is near this trend line. Okay, you will be drawing this trend line, and your strategy is simply to enter the trade when it is coming near the trend line with the engulfing candle. Simple as that, guys. So what you will see before the candle of closing of this candle, so most probably you'll be seeing something like this, right? So you would have seen, like before the candle is closing, you'll be seeing that engulfing candle, which is green, and it would have moved faster itself, faster also. So most of the people will get the FOMO, and you will be entering here and keeping your stop loss here, so which is near the low, and you'll be targeting something, let's say this area, this this closing this area, okay, which is this area. So you will be thinking, okay, my strategy is satisfied, it is forming an engulfing candle this near the trend line, and you will be convincing yourself, guys. So basically the most worst thing happens in trading is basically the mind convince itself, right? So basically what you'll be thinking is, it is near the trend line, it is near the demand area, and it is making an engulfing candle, so I should enter here even after, before closing of that particular 1 hour candle, which is in my strategy. But I will get the FOMO, and I will directly enter here without the candle closing. So what happens here? The price reject this area and come backs down and hits your stop loss. So what we can do to avoid this kind of scenario is simply to wait for the candle to close. Simple as that, guys. You just don't want to watch the market whole time. You have already taken your time frame. So just set an alarm, guys. Simple as it. Or give an alert, keep an alert there. So if you are able to see this price have already taken this high, lower high, and it is forming here. Wait for the candle to close. If it is not closing the candle, leave that trade. Again, some people also will do this also. So they are not just patient enough and keep the buy stop here, yeah, right? Because the like what they will be thinking is, already it have made an higher high here, and it should not break this high if it is continuing up. right? So what they'll be doing, they'll be keeping your buy stop here and keeping the stop loss here, which is also wrong, guys. If you're a beginner trader and if you're not able to understand like lot of things, lot of advanced things are there. So if you're beginner traders, and keep it simple, guys, simple as that. Just wait for the candle to close. I'm just giving an example on my strategy. So if you're having a system, and if you're having a system which respect the 200 EMA, and if you're if you have the rules of entering the trade, if there is an engulfing candle of bearish or bullish candle near the 200 EMA, and you'll be thinking, okay, I'll be enter the trade after the engulfing candle, until and unless it is not the closing this uh, like candle, just don't enter, guys. Because of this you'll be like saving lot of failure trades, like simple as that, guys. So what we can see is the trend line have just slightly changed. Still the strategy is working, but the trend line have slightly changed and the market moved up in a direction, and the strategy is also working. Basically mostly everyone will be forming the candle, like drawing the trend line using the candle body close. But in this slightly the thing have been changed. Just it came little down here and respected this level. It broke this level and respected this level and reacted from this level. So basically you would have entered here because of the bullish candle here, and kept your stop loss here, and maybe target this area. I just don't want to like go for the ultimate always. You can just target this area because the candle is closing here and it is near the higher like just below above a little bit. Okay, so this trade is rewarding 4 is to 4, 1 is to 4, guys, which is simply awesome. So if you are still not satisfied with this candle because of this bearish engulfing candle, you can wait for the other candle to close and you can enter this trade here, guys. Simple as it. So if you're having the problem that always you're watching the market and you're stressing out always, like I just want to enter the trade and I just want to enter the trade, and if you're having the urge to trade always, can simply wait for the candle to close, guys. If you are able having that patience to wait for the candle to close, you will like let's think in this way, okay? If the candle is coming up and you'll be thinking, okay, I need to take the trade when the candle is closed. So you'll be having at least like 5 to 10 minutes to analyze this trade itself. Like again you can do the analysis also whether I am correct or wrong, right? Again I can erase everything, and again I can draw this trend line, and I will be using the moving average, RSI, everything, and I will be having the time also. If you get FOMO, you will be directly entering here because of this impulsive momentum, which is a trap created by the banks and every like market makers, guys. So we can avoid these kind of things, and FOMO and the urge to trade always. Everyone would have like had this urge to trade always in the beginning of their trading career. So you can avoid everything just by following the wait for the candle to close, guys. Simple as that. And other thing I just want to like even the fake outs, guys. So you'll be thinking this is one of the simplest way which will avoid like at least like 70% of the fake outs, I think. So this is also a fake out, right? Because it made higher high here, making this lower high, and it faked out. And so basically you we can avoid most of the fake out using the wait for the candle to close, guys. Simple as that. So I can't emphasize anymore. Waiting for the candle to close will avoid lot of problems, guys. What are the problems? Urge to trade always, that can be avoided. Fake outs can be avoided. FOMO can be avoided. So, like with this simple one thing, waiting for the candle close and sticking you to a time frame will avoid lot of mistakes, guys. Simply with this, if you're like acting upon in this rule, you will have lot of changes in your career, guys, in your trading like success, guys. So simple as that. And again, I will give you a last advice on this, the last tip, not advice, last tip on this is just stick to a particular time in every day, guys. So if you're having work 9 to 5, just fresh up everything and stick to a particular time. If you're going to trade at 6:30, set an alarm at 6:10 and go and fresh up yourself. Have a time, guys. Have free time. Like, you should not rush the trade, guys. You just need to have a particular, like, at least like 10 minutes of analysis. Like, you should have a free mind. Just breathe, calm yourself, and have a time of 10 minutes. Do your analysis every day at 6:30. You will see the opportunity, whether you have any opportunity, because of it is also near the 1 hour candle close as well. So after the closing of the candle, you'll be seeing whether I have any opportunity on that, and if I have an opportunity, I will directly enter. Simple as that, guys. So hope you have enjoyed this video and gained something useful from this video. And please leave your feedback, guys. Again, I'm telling you, simple as that. Wait for the candle to close, and you'll be having a successful career in trading as well. Well, thank you so much and have a nice day.